The investment demand, long thought to be moribund, shows distinct signs of revival. Gross fixed capital formation contributed as much as 29.9% of the total growth in gross domestic product or GDP in the July-September quarter. Gross fixed capital formation increased by 6.8% from a year ago. The bulk of the increase in GDP was of course contributed by private consumption, which increased by 6.8% and accounted for 55.1% of the rise in GDP from a year ago. Government final consumption expenditure was up 5.2%, contributing as much as 10% to GDP growth. The external sector had a negative contribution to GDP during the quarter. Valuables, or investment in gold and silver, also accounted for a substantial chunk of the rise in expenditure. Looking at gross value added (GVA) at basic prices, the story is one of high growth in manufacturing. The manufacturing sector contributed 22.9% of the total growth in GVA. The total contribution of the three services sectors was 67.3% of the rise in GDP. The performance of the construction sector was dismal, probably the result of the depressed state of the real estate sector.